Have you ever asked yourself, who is your greatest enemy in trading? It's not the market, not the news, not even your strategy. The real enemy is your own mind. The Real Enemy is one such book which says that until you understand your emotions, habits, and mental patterns, no amount of technical analysis can give you consistent profits. So if you want to be not just a person who earns money, but a professional, stable, and mentally strong trader, you must watch this video till the end. Chapter 1, Part 1. You don't lose to the market, you lose to yourself. And this loss is the most expensive. The biggest reason for failure in trading is not a bad strategy or a bad system, but the mental trap that acts as a snare. This statement begins with a truth most people don't want to admit. Our emotions either make or break our decisions, and when we ignore this, we lose not only our money, but also our self-confidence. Every trader at some point says to themselves, I knew this trade was wrong, yet I took it. Or, I took a profit, but too early, and now look how much higher it has gone. All these thoughts show that the problem isn't external, it's within us. Trading isn't about operating a machine. It's a mental battle. Every trade is not just a test of your knowledge, but also a test of your patience, fear, greed, and self-control. Now the question is, how do we sabotage ourselves? The author says that when we are unconsciously attached to our past experiences, they force us to see every market move through the lens of fear or greed. For example, if you've ever had a big loss, the next time the market drops even slightly, you'll panic and cut the trade even if there's a sound reason to stay. And if you've made a big profit in one go, you're more likely to take bigger risks the next time. This means no matter how many technical charts, indicators, and setups you know, if your emotions are unchecked, you'll repeat the same mistakes. It simply means you have to read yourself before you read trend lines and candlesticks. Now let's talk about the mindset with which we deceive ourselves. Our brain doesn't want two things. One, to admit failure, and two, to tolerate uncertainty. And both of these come up daily in trading. So when you take a loss, it hurts your ego. When you wait for an entry, FOMO arises. And when you exit a winning trade early, regret haunts you. These things happen when your inner, unresolved emotional conflicts are stronger than your trading system or the market. The author says, every trade is a mirror that shows you who you really are. If you want quick returns, if you trade on others' advice, if you rush every time, then this isn't a trading problem. It's a manifestation of your inner instability. So, don't just analyze your trading journal with profit and loss, also write down the language of your emotions. Every time you take a trade, ask yourself, why am I taking this trade? Is it part of my plan or just an emotional reaction? Am I influenced by fear or greed? The author suggests keeping a performance journal where you record not just entries and exits, but also your mental state at the time. This habit will slowly show you the truth you've been running from, that the reason for the loss wasn't the market, but your own reaction. And the moment you grasp this truth, your growth begins. Earning money in trading is one thing, but knowing yourself and fixing your habits teaches you how to keep that money. Because following a trend is easy, but controlling yourself is hard. And this chapter's most valuable lesson is this: you don't often lose the trade, you give up on yourself. And when a person gives up on themselves, no strategy can save them. Chapter 1, Part 2. The process of working against yourself. In the first part, you learned how our emotions quietly control our decisions during trading. In this part, the author goes a step deeper and teaches us to understand self-sabotage. The first thing here is emotional triggers. Every trader has a weakness, some fear, some insecurity, some old experience that becomes active in a specific situation. The author says these reactions aren't instantaneous. They come from our unconscious mental patterns that we've absorbed from childhood, society, or past experiences. So people who repeat the same mistakes in trading aren't ignorant, they just haven't been able to free themselves from their old emotional traps. Now the question is, how do you get out of this? Here, the author talks about a powerful method, self-observation without judgment. In other words, observe your behavior, but don't punish or blame it. For example, if you take a trade without a reason, tell yourself, why did I take this trade? This is the beginning of real improvement. Now the author offers another interesting idea. Your trading patterns reveal your lifestyle, thoughts, and even relationships. If you repeatedly avoid things in life, fear making decisions, or are influenced by others' opinions, these habits will also show up in your trading. So just fixing your trading system won't work. Until you change your habits of thinking, behaving, and making decisions, stability in trading won't come. The author then makes a profound statement. Emotional discipline is not about suppressing your feelings. It means understanding and managing them. Suppressing feelings doesn't make you a machine. It slowly hollows you out from within. The right way is to identify, acknowledge, and control them. Just as a pilot doesn't ignore wind gusts but adjusts the flight accordingly, a professional trader acknowledges their emotions and adjusts their strategy.
The next big issue is perfectionism. Many traders feel they have to be right every time, to win every trade. But the author says this thinking is the most harmful in trading, because when you expect to win every time, a small loss also makes you feel disappointed. Remember, consistency in trading, which means accepting both losses and wins, is the foundation of long-term success. Finally, the author summarizes this chapter. Your real enemy isn't the market, it's your unknown mind. Understanding emotions is the biggest technical skill. The habit of observing, acknowledging, and correcting yourself brings long-term success in trading. And the most echoing sentence of this chapter is, Chapter 2, Part 1. Those who run from themselves always look for something in the market and eventually lose everything they already had. In the second chapter, the author draws our attention to a very important psychological truth, that trading is not just a battle of decisions, it is also a battle of identity. Because a person who doesn't know who they are, what will they look for in the market? Many people start trading to earn money, but slowly they tie their entire self-worth to that success. One win, and they consider themselves a genius. One loss, and they consider themselves a failure. The author makes a profound point here. If your self-respect is tied to every trade, you aren't trading, you're swinging on an emotional pendulum. Now let's talk about the identity trap that leads traders astray. Because of this, they start treating trading like a job. They trade every day whether there's a good setup or not. Why? Because if they don't trade, they feel like they aren't a trader. This mindset doesn't make you a trader. It turns you into a person who is seeking stability in instability. The author says, you are not your trades. Your identity must be separate from your outcomes. This means you're a person who thinks, practices, and makes decisions, but the result of every decision is just an experience, not your evaluation. So the author suggests that you make your self-definition internal, not external. An external identity says, if I earn money, I am successful. An internal identity says, if I follow my process, I am successful, regardless of the outcome. The author breaks another illusion in this chapter. Self-confidence doesn't come from affirmations or positive thinking. True confidence comes from habit, structure, and self-awareness. Confidence comes when you have tested your system, recorded your emotions, and reviewed every decision, because you believe that you are honest in your process.
The author says, trading is a performance activity, like sports or music. And just as a musician or athlete constantly practices, watches their videos over and over, a true trader also trains for mental performance. Now, let's talk about another overlooked aspect: burnout and emotional exhaustion. Many people think they are lazy, they don't have time, they've gone off track, but actually, they're just emotionally tired. Why? Because they have taken their trading identity so seriously that winning every day feels necessary. Every loss feels like a personal insult. And slowly, the brain gets tired, the body gets tired, and the ability to make decisions weakens. So the author says, identify mental fatigue. Taking a break is not a weakness, it's a professional discipline. And tie your identity to your values and growth, not to daily outcomes. When your trading becomes free from the need to prove something, that's when you can truly become a calm, focused, and effective trader. The first part of this chapter teaches you to see yourself separately from the market. Your existence, your thoughts, your ability are not determined by a single market move. And the one who understands this hasn't won the market. They have won their own mind. Chapter 2, Part 2. When you start to see every loss as your self-worth, you're selling yourself cheap. In the previous part, we learned that true confidence comes not from trading outcomes, but from the clarity of your behavior and thoughts. In this part, the author explains in detail the process through which you can build a strong trader identity that can remain stable regardless of a win or a loss. This process begins with the ability to take real feedback. The author says, feedback is the breakfast of champions. If you only record entries and exits in your trading journal, you're only using about 10% of your brain. But if you make mental notes after every trade, such as, how was I feeling at that time? Was I in a hurry to take the trade? Did I take any unplanned risk? Then you start reading your own behavior. And this is where real change begins. The next important aspect is rehearsal and mental practice. Every successful athlete plays not just on the field, but also in their mind. They repeatedly think about situations where they might make a mistake and create a reaction. The author says this helps your brain default to a new response, and you don't fall into old traps. Now comes the power of inner dialogue. You have hundreds of conversations with yourself every day, and often those conversations are negative. I will never be consistent. Maybe I don't have what it takes. I make mistakes repeatedly. Maybe I'm just not cut out for this. The author says these aren't just thoughts. They become your neurological programming. This means the brain repeatedly follows the path that you yourself show it.
Therefore, it's essential that you make your inner voice a supporter, not a critic. After every loss, tell yourself, I acted outside of my plan. I can fix this. This isn't my evaluation. It's an experience. I am learning, and learning is not failure. This self-talk gradually changes your psychology and builds a stable, credible trader identity. The author now gives a final but extremely valuable piece of advice. Detach from outcomes, attach to process. As long as you trade with the hope of earning money every time, you will be bound by the fear of losing. But the moment you try to make a better decision every time, your self-respect becomes independent of the market. This doesn't mean you don't care about money. It means you don't chase money. You move towards it with your behavior and decisions. This chapter ends with an echoing lesson. Every trade is an opportunity, either to make money or to make yourself better. And when you start thinking this way, the market can't break you because you have already put yourself together. Chapter 3, Part 1. The root cause of trading failure is often our mental disconnection, not just bad analysis. The third chapter gives us another powerful idea that the root cause of trading failure is often our mental disconnection, not just bad analysis. The author says in this chapter that many traders focus only on a script or a setup, but they forget that the real focus should be on connecting with oneself. If your mind wanders, if you are internally restless, even the best strategy can deceive you. Now the author explains the difference between two types of mental states. Immersed mindset, where you are fully present, focused, and emotionally calm. Reactive mindset, where you are either stuck in past mistakes or drowned in future worries. When you are in an immersed mindset, every chart, every pattern, every movement looks crystal clear to you. When you are in a reactive mindset, the same market starts to confuse you, creating insecurity within you. The author states here, the state of mind with which you approach the market is your real edge. Now the question is, how do you reach this calm mental state? The author says that the path goes through self-awareness. Every time you sit at the trading desk, ask yourself, am I bringing any anger, regret, or fear today? Have I calmed my mind today, or directly entered the noise? Many professional traders meditate, journal, or close their eyes for 5 minutes to detox their minds before trading. Why? Because when the mind is clear, the language of price action can be understood. So the author suggests a habit, pre-trade preparation ritual. This ritual can be just 4 or 5 minutes, but it moves you from a state of reaction to a state of response. An example of a ritual. Close your eyes and take 5 deep breaths. Remind yourself, today I have come to learn, not to prove. Identify today's emotional triggers. Will yesterday's loss affect my decision? Finally, tell yourself, I will follow the plan, not the outcome. This small habit will bring you to that mental state every day from which the clearest and calmest trades come.
Now, the author raises another important point. You have to apply the power of your focus to depth, not quantity. That is, do less, but clear analysis. Learn to see less, but at the right time. And most importantly, keep your focus where it is needed, not where habit pulls it. This chapter reminds us that a calm and conscious mind is the instrument through which any strategy comes to life. Because the game of trading isn't about watching the market, it's about understanding yourself. Chapter 3, Part 2. The day you recognize your inner instability, you'll begin to understand the market's moves. In the first part of the 3rd chapter, we learned that the biggest edge in trading is our state of mind. In this second part, the author explains more deeply how mindfulness, awareness, and controlled attention separate you from others and help you think like a professional. The author clarifies the topic with an example. Suppose you have 2 traders in front of you. First trader reacts to every small move, wants to catch trades quickly, enters and exits repeatedly because he fears losing something. Second trader, calm, thinks about every move, sits with discipline, has no hurry. Now the question isn't who trades more. The question is whose mentality is balanced with the market. The author says, a calm mind is the foundation of creative decision-making. This means when you are internally stable, you can make decisions with the clarity that is essential in trading. Now let's talk about how to build a calm and focused mind. Here, the author talks about the method of mental recentering. Whenever you feel that you become internally scattered, follow these 3 steps. Bend. Stop trading. Move away from the screen. Breathe. Take 3 to 5 deep breaths. Calm your body. Refocus. Ask yourself, what is my role at this moment? Am I thinking professionally or emotionally? These 3 steps bring you back to the center from which objective thinking begins. Now the author says something interesting. Many people talk about the flow state in trading. Flow state is that mental condition where a person gets so lost in their work that time, fear, and worry seem to disappear. The author says that this flow state only comes when you have clear rules, inner peace, and your purpose is not to earn but to do the right thing. This means when you focus on decisions, not outcomes, you get into the flow. Now the author tells us about another habit, post-trade decompression. Every day after trading, take 10 to 15 minutes and write the answers to these questions in your trading journal. In which trades was I emotional today? When did I ignore my system? Why? When did I trade according to the plan? And what was the outcome? How much did my mental state change from the beginning to the end of the day? This habit teaches you to create a map of your mental state every day. Slowly you begin to learn in which situations you think strongly and in which you become weak.
Now, an important point. The author says that a trader's job is not just to earn, the real job is the search for clarity. Where does clarity come from? From habit, from discipline, and most importantly, from inner honesty. Because when you recognize your inner truth, the market doesn't scare you, it tests your decisions, and you remain calm. The author ends this chapter with a profound sentence. Because the market will change every day, but if your mind is stable, alert, and responsive, you will be able to think the same way in every changing market, and that thought will set you apart from others. Chapter 4, Part 1. The one who can't change themselves cannot win the market, because the market changes every day. The fourth chapter takes us to a completely new area. Beyond psychology, now we're talking about change. The author raises a very important question here. Do you really want to change, or just change the outcome? Many people say they want to change, but in reality, they stick to their old habits, old beliefs, and old fears. They want to get better trading results without internal change. But the author clearly says, where does this internal change begin? It begins with self-awareness, but not just by understanding, but by admitting. Admitting that, yes, I have a habit of overtrading. Yes, I take every loss personally. Yes, I look for shortcuts because I'm afraid of uncertainty. Now, the author says that change doesn't happen just by thinking about it. Real change comes from systematic practice. If you want to be more patient, just reading a book isn't enough. You have to create a small habit routine for yourself that you will do every day, such as writing down your fears every morning before trading, and also writing their answers. These small habits gradually change your thinking, feeling, and decision-making patterns. Now, the author gives us an excellent framework. Awareness, when you recognize your mistakes and emotions. Interruption, when you start to stop in the middle of those mistakes. Replacement, when you replace that behavior with a new habit. For example, if you trade on FOMO every time, the first step is to understand why this is happening. Awareness. Then, the next time that same feeling comes, you stop yourself. Interruption. And then, instead, you take a calm breath and look at the chart again. Replacement. This process doesn't change in one day, but the more you repeat it, the more your mental wiring will change. Now, the author raises another deep point. Identity-based change, which means you change not just your behavior, but also your thinking identity. If you consider yourself an emotional trader, you will repeat the same kind of actions. But if you tell yourself every day, I am a disciplined decision maker, you will slowly adapt your mind in that direction. The author, based on neuroscience, says that every new belief, every new behavior creates a new neural path, and the more you repeat it, the stronger it gets. This means discipline is not a talent, it is a practice, and this practice is most powerful when you link it to your inner identity. The first part of this chapter says that change doesn't come just by reading the external market. Real change comes when you start reading your inner market.
Chapter 4, Part 2. Your biggest trade isn't a stock, but that decision where you move beyond your old behavior. In the second part of the fourth chapter, the author takes you towards that difficult but necessary path, which is the path of long-term change. Because the truth is, the habits that keep you away from success today were once your way of staying safe. Many traders overtrade because somewhere inside them there's a voice. If I don't do something, I'll miss an opportunity. Some traders can't accept losses because they've never learned how to separate themselves from failure. The author says here, every trading mistake has a psychological function. This means don't hate your mistake, understand its root cause. That mistake came from an old belief, maybe from childhood, maybe from a past experience, and when you understand that, only then can you change it. Now we will talk about creating new patterns. The author teaches us a practical exercise. For every habit you want to change, create a new default response in advance. For example, if your trigger is to panic after seeing a missed move, then your new response can be, I will calmly look for the next opportunity and stick to the plan. If your trigger is the feeling of revenge after a loss, then your response can be, I will pause after a loss. This means change doesn't come just by thinking, it comes from repeated practice. Now the author talks about accountability. Just making promises to yourself is not enough. Ask yourself these questions every week. What behavior have I changed this week? Which triggers are still holding on to me? How connected have I felt to my goals? This process of questioning is the mirror that shows you who you really are. You are a human, not a machine. Mistakes will happen, but they don't devalue you. Instead, every mistake is an opportunity to update your system. The author says, change requires safety and you. The original text has an incomplete sentence here with the last part missing. The author, like a coach, says, you fell, but you got up. You lost, but you learned. You broke, but now you are rebuilding. Chapter 5, Part 1. The real battle in trading isn't on your chart, it's within you, and the one who conquers themselves conquers the market. The 5th chapter takes us to an area that most traders ignore, self-examination and neutral evaluation. Many people consider themselves unlucky. Some call themselves overthinkers, and some consider themselves disciplined. But when the emotional storm comes, all masks fall off. The author says, you are not what you think of yourself, you are what your behavior consistently shows. This means it doesn't matter what you think of yourself. The real difference is what you repeatedly do, especially when the situation is out of your control.
Now, the author teaches a very powerful process in this chapter, performance-based self-awareness, which means self-analysis based not just on thoughts, but on data and patterns. For this, you have to record 3 aspects of your daily trades. 1. Technical decisions. Did you trade according to the plan or not? 2. Emotional state. What was the level of fear, excitement, or impatience you felt at that time? 3. Decision. Did you make a decision staying in your plan? If you track these 3 things every day, your patterns will become clear within a week. On which days do you lose more? Monday blues or Friday fatigue? In which situations do you rush? In which situations is your discipline the strongest? This observation shows you what the real story is and where the weakness lies. Now the author says something even deeper. Fear, greed, fatigue, these emotions are not the enemy. The enemy is your unawareness of these emotions. Because when you know what you are feeling, you can reroute your thoughts. The author teaches a technique here, emotion labeling. Whenever a strong emotion arises, give it a name. This is fear of missing out. This is revenge thinking. This is hope-based holding. According to psychology, when you name an emotion, its effect is reduced by 50%, because then the emotion isn't on you, it's in front of you. After this, the author talks about another essential thing. Every trader has some cognitive biases. You look for the data that proves your idea is correct. A small loss feels so heavy that you get stuck in a wrong trade. Overconfidence. If 3 trades are right, you think that now you're invincible. The only way to break these biases is to question them. When your mind is most confident, ask yourself, am I in this trade because it's in my plan or because I'm bored? Have I really tested this setup repeatedly, or is it just a gut feeling? If another trader did this, would I have the same opinion? These questions pull your mind out of reacting mode and into thinking mode. The first part of this chapter explains that self-examination doesn't mean belittling yourself, but seeing yourself in the mirror with complete honesty. Because the one who can look themselves in the eye can read every mask of the market. Chapter 5, Part 2. The first condition to beat the market is to defeat the confusion within yourself.
The second part of Chapter 5 guides you from self-reflection to self-improvement. The author says it's not enough to just know where you make mistakes. The real victory comes when you create an action plan to improve yourself every day. Here, the author teaches a profound exercise, the One Change Per Week Challenge. Each week, choose one weakness in your behavior and work solely on it for the entire week. For example, Week 1, stop overtrading. Week 2, take a 10-minute break after every loss. Week 3, follow your morning preparation routine. Write this change down on paper. Read it aloud once a day, and repeat its purpose before you start trading. The author says, lasting change doesn't happen in giant leaps. In other words, permanent change isn't magic. It comes from daily practice.
Now, the author discusses another important technique, performance replay. At the end of the day, mentally rewind the decisions you made. Did you make an impulsive decision out of panic? Did you take the correct exit according to your plan? What were your thoughts at that time? What was the impact of those thoughts? This replay gives you next-time awareness, meaning that when the same situation arises again, your mind will say, "We've seen this scene before, and we know what to do." Next, let's talk about the influence of the environment. The author says that our behavior is often triggered not from within us, but from our external environment. Think about it. If your trading desk is always messy, can your mind make clear decisions? If your mobile phone keeps sending alerts beside you, can you stay focused? So the author advises keeping your workspace calm and organized. Set a time slot where you will only do trading analysis. Stay away from your mobile and other distractions because the environment in which you think determines the quality of your thoughts. Now the author moves on to a deep but very necessary concept, redefining failure. Many people think after a loss, maybe I'm not cut out for this field. I don't have that edge that professionals have, or I have bad luck. But the author says failure is not the opposite of success, because every mistake shows you where you need to improve. Every fall shows where your wall is weak, and every struggle is the beginning of a new rule. The author suggests answering these 3 questions after every loss. 1. Where did I deviate from my plan? 2. What did I feel at that moment and why? 3. What will I do differently next time? Through this process, every failure becomes a lesson, not a source of shame. At the end of this chapter, the author says, because the more you understand yourself, the less you'll fear the market's manipulations. The more deeply you can make decisions, and the more clearly you'll see that making money in the market isn't about strategy, it's about clarity of mind. Chapter 6, Part 1. If you keep making the same mistakes, you probably don't need information, but honesty. Chapter 6 talks about the most neglected but most powerful system in trading, the self-coaching system, which means training yourself to be your own mentor. The author says that no coach, no guru can be with you in every situation. But if you learn to deeply understand, question, and guide yourself, you become the captain for yourself in every storm. This chapter begins with a vital principle. Coaching is not motivation, it is structured reflection. In other words, self-coaching is not just about encouraging yourself, it's a structured analysis. The author provides a simple but powerful framework. 1. Observation. What did I do? 2. Evaluation. Was it right or not? Why? 3. Planning. What will I do differently next time? This process is as profound as it is simple, because it pulls you